This is Greg. Greg has just begun his own business selling gardening services because that is what he knows best. He provides tree planting, weed removal, and flower pruning services of the highest quality and is beginning to create quite the market for himself. He has 5 employees who work for him on the daily, and Greg is constantly looking for new ways to expand his business. But out of the blue, the new financial year rolls around and Greg has to do his own taxes. Being classic Greg, he only knows the ins and outs about gardening and not tax. So how would he know if his tax reports are correct and follow compliance rules? Well, we at Trihalo Accountancy will give you a quick, easy but practical guide to tax compliance. We can divide tax compliance into two sections, payments and reporting. Payments involve paying the government the correct amount of money, whilst reporting consists of lodging the proper forms with correct information. These two sections are usually due on the same day. These reports seem daunting at first, but compiling them will be a breeze if your company has suitable bookkeeping methods to store necessary data. There are several taxes that companies need to stay on top of throughout the year. So, firstly, there is the income tax. Income tax is essentially a tax imposed on a company in respect to their profits paid annually. Profits are calculated by subtracting overall revenue from their expenses, including employee wages, material costs, and other overhead costs. For the financial year of 2022, the corporate tax rate is 25%. So if a company made 100K in profits, they will have to pay 25K to the government as their income tax. The due date is usually 10 and a half months from year end or the 15th of May of the following year. A tax that everyone is familiar with is GST. Unlike common belief, GST isn't kept by companies, instead paid back to the government. GST is one of these taxes which can be reduced, but we'll go through this in a different video on GST claiming and GST-free products. The ATO, Australian Taxation Office, charges companies taxes as well. The two will go through are PAYG installments and withholding. PAYG stands for Pay As You Go, hence the quarterly structure to prevent companies from paying a large sum of money at the end of the year, along with their income tax. PAYG installments is determined based on a company's turnover, while withholding is a system of withholding income tax from an employee's wage. Companies usually pay the tax to the ATO on behalf of the employee. GST and the two PAYG payments need to be lodged via a Business Activity Statement, or BAS. BAS accurately declares a company's tax obligation and is submitted to the ATO. Employees are also entitled to a super payment, which is 10% of their salary. This is recorded fortnightly when they receive their weekly wages, but not paid until the end of the quarter. Companies provide the information and money to a super clearinghouse, which distributes the fund to all employees via the nominated superannuation fund. And lastly, companies need to ensure that employees are safe in their work environments and provide work cover if substantial injuries affect any employees. This is mainly up to the company to decide whether or not it will be a quarterly or annual payment. So, in Greg's instance, he would have to stay on top of the amount of money he makes to calculate his income tax accurately and efficiently, and bookkeep employee wages and turnover so he can lodge precise BAS to the ATO. Greg will need to keep in mind of the products he charges GST for, and lastly keep his employees safe by purchasing work cover for his 5 employees. Even though it seems like a lot of work, numerous software companies provide efficient bookkeeping methods such as Xero, Astute, and MIOB, which are easy to set up and learn. If you would like to learn more about accounting and tax, please visit our website at trihalo.com.au.